of move. Maybe you guys may be thinking, what is that? Use of these are all the things. If the employer has given you some assets which can be laptop, desktop, AC, TV, sofa, car, whatever the asset, if the employer has given to you, okay, in that sense you have to understand this. If employer has given to you computer or laptop, it could be for official purpose or personal purpose, for both the purpose. It is fully exempt. Computer and laptop given fully exempt. Use means what? You will use it and give it back to him. Okay, it will not be retained by you till the end. Only to use that one. Other assets could be fridge, car, AC, washing machine. If you are a director like Malini in one of the company, she can get fridge, Audi car, AC, washing machine, dishwasher, TV, everything. Okay, if that be the case, if it is owned by the employer, that means employer has purchased that one and given to the employee. In that case, 10% of cost of these assets will be value of your perquisite. Understood?
Yes, sir.
Yeah. If it is not owned by him, that means the employer has not purchased. He has hired from some other person, like Audi car given to employee, which has been hired by Zoom, from Zoom. Whatever the hire charges paid to Zoom becomes your value of perquisite. Understood? If it is owned by employer, 10% of the cost of these assets. If it is not owned by employer but hired by employer, whatever the actual hire charges paid, that becomes your perquisite. It is taxable fully. Any doubt in this? I don't think there is much difficulty in this. The next part is tricky one. Transfer of movable asset. What is meant by transfer? What is the difference between use and transfer?
Their ownership changes, sir.
In where?
When it's transferred.
When it transfers, the ownership changes. That means if the assets are owned by the employer, if those assets has been sold to employee, then the ownership changes, right? The title in goods passes on to the person who owns it, right? In that case, what is the value of perquisite? Yeah, before I go to this one, the logic behind bringing these provisions, let me tell you. See, if you get hired in one of the organization, normally the salary becomes taxable, yes or no?
Yes, sir.
What employer and employee has made the tax planning in such a way that you get salary also and all the benefits, but you get less tax payable. To make these things happen, instead of paying you the monetary emoluments, the employer used to buy the required assets and he used to transfer to you, so that instead of you go and buy, indirectly employer will be buying for you and giving to you. In that sense, you are also satisfied, employer is also satisfied, and the government becomes the, what do you call, the victim for not getting the genuine tax. For that very reason, many years back they bought this provision to curb all these kinds of activities and bringing these kind of activities into the tax net. Understood now what is the intention of the employer and employee and also the government? Okay, see. Now, when the assets have been transferred to you, what is the value of perquisite or the benefit it is passing on to you? That becomes taxable is the question. If the asset being laptop or computer, taxable amount will be WDV minus whatever the consideration you pay to purchase this one. The difference will be taken as value of perquisite if it is positive. Always positive. It should be positive. Then only the perquisite value will be considered. Let me explain once again. The taxable value of the laptop or computer transferred by the employer to employee, that amount will be, taxable amount will be WDV minus consideration. Consideration means whatever the amount you pay to get that asset, in this case computer or laptop, that difference amount becomes your perquisite value, that will be included as salary. Then the question comes, what is meant by WDV? WDV means written down value. How to calculate this WDV? The WDV will be calculated by depreciating at 50% on WDV method from the cost of the asset. WDV will be cost minus depreciation at 50% on WDV with respect to computer and laptop. Those who have studied commerce, they may be knowing what is the WDV method. Those who haven't studied commerce, let me explain that. I will just take computer. Computer is purchased on 12th May for rupees 1,20,000. Okay. same has been transferred to employee on 30th Jan 23 for rupees 20,000. Understood? Any doubt in these two? Who is not able to relate this one? Purchased on this date for rupees this much value, transferred to employee on this date for rupees this 20,000. Quite simple, right? There is no ambiguity in this.
Understood, sir.
Okay, nothing is there. Purchase and sell. Now you have to calculate the value of this asset before it is transferred to employee. What is the value? We need to arrive. How to arrive? It is given in the provision. If it is related to computer or laptop, the depreciation should be provided on cost or on the opening balance at 50% of the WDV. That means depreciation method is WDV method. That means less depreciation from 12th May 19 to 12th May 20. On year basis you need to give. From this date to next year same date. This multiplied by 50%. How much becomes balance? Cost is 1,20,000. Depreciation year on year basis you need to calculate. Only for this purpose, 12th May 19 to 11th May 20 rather, okay? How much? 50% of this. Now it became 60,000 as on 12th May 20. Now again you calculate May 20 to 21. Understanding how to calculate depreciation on WDV method, whatever the balance you get after deducting the depreciation, on that you need to apply the percentage again. That is called as WDV method. Okay, 21. Again you have to calculate depreciation from 21 to 22. WDV as on 12th May 22 is this much. And you have sold it on 23rd. You cannot claim depreciation from 12th May 22 to 12th May 23. Why? Because it has been sold in the month of 23 Jan. Hence you have to stop it till here only. Now you tell me, assume it has been transferred to 10,000 I will take. It has been transferred to 10,000. You should have transferred at 15,000, but you are transferring at 10,000. Is there any benefit given? Is there any benefit is transferring?
Yes, sir. 5,000.
5,000. This becomes taxable. This 5,000. This is the amount received from employer. This one. You should have transferred at 15,000, but you transferred at 10,000. 5,000 becomes taxable. Understood?
Yes, sir.
How to calculate depreciation on year-on-year basis? Year-on-year basis. If it is computer and laptop, 50% on WDV method. If it is car, 20%. Any other asset, 10% on SLM basis. SLM means straight line method.
So, one thing I didn't get is that you said taxable amount will be WDV minus consideration.
Yes.
And consideration here will be 1,20,000 or
No. 10,000. From the employee, whatever you are getting back.
The transferred amount.
Transferred amount.
Okay, sir.
Okay. Can you guys calculate if I give different date and different amount for the computer and let me know the answer?
Yes, sir.
Okay. If the computer is purchased on December 18 for rupees 2 lakhs and transferred to employee on 3rd November 22 for rupees 20,000. You have purchased the computer on 10th December 18 for rupees 2 lakhs. Transferred to employee on 3rd November 22 for rupees 20,000. What is the value of perquisite, if any? Taxable perquisite, if any, in the hands of employee.
So what the depreciation?
Depreciation, you need to remember, it is not be given. It will be always 50% for computer and laptop.
So is it 5,000?
How?
Because 10 December 2018 to 19 is 1 lakh.
18, 19,
1 lakh. 1920 is 50,000.
1920 is 50,000. 1 second. This is 1920. Okay.
So 2021 is 25,000.
2021 is 25,000.
But you can't calculate till this 10th December 2022.
Yes. Why I cannot calculate? Because
1 month.
we have sold before that only.
Yeah.
Only we need to restrict till 21st, 3rd November, 10th December 21st. And we have sold it for 20,000.
So 5,000.
Balance 5,000 is taxable value of perquisite. You guys might get the question like this. Okay. Bhuvaneshri, Ghana.
General question, isn't it still beneficial for people to do that, because general tax on when you buy a car in India for like a normal individual is still pretty high.
Mm-hmm.
So isn't it still beneficial if the company buys it on their behalf and then transfers later? If it's an add-on in your salary.
See the two-way aspect. Okay. One is If you only using that car, assume that the company buys the car and you are only using, and you will be knowing what is the condition of the car.
Yes, sir.
If someone has used and if you are buying that one, it is as good as buying the second hand only, right?
Yeah, because you don't know how they would have
How?
used it.
Yes. It's all there. Okay. You need to assess. But normally, the company will give for the lesser values always. Those who are working in the computer industry, computer companies, I mean to say software companies, the person who is working on the laptop will be given the same laptop or sold the same laptop to that employee only normally.
Okay.
But
Okay.
they will offer to that employee. Okay.
Understood, sir. Got it.
All these things, consulting charges will apply.
Nice, sir.
I'm just kidding. I believe that you, in this bunch of students and me, you guys are, don't take me otherwise. Just for the sake of making you guys to understand, I will be using your names at times and explaining the provisions, keeping you as a the assessee in that point of view. Whenever I say you means not exactly you guys. Okay. Just for the purpose of explanation, I will be using. And how to tax the computer and laptop if it is transferred to you. If the same car is transferred to you, instead of 50%, 20% you used to take. Understood?
Yes, sir.
If any other asset other than car and computer and laptop, you need to depreciate it 10% on SLM. Maybe those who do not know about SLM is just take this. These 3 years, if it is 10% means on this 10%, every year 20,000 depreciation, same amount of depreciation until you sell, you should be giving. Straight line method means same amount of depreciation. Understood, Gahana, Malini? Those
Yes.
who are not studied commerce or
Yes,
studied
Yes.
in their childhood. Okay. Now we understood how to tax or what is to be included as the value of perquisite when there is a transfer of movable asset. See here, other asset becomes everything apart from these two. For these two it is specifically given, the remaining will becomes under other asset. Okay. Can you guys calculate and tell me the perquisite value of this? Okay, sir. Text in the chat box. Okay, sir. Or no issues.
Sir, car is the computer is 5,000.
Mm-hmm.
Car 1,42,000.
Mm-hmm.
Television 23,000.
Okay.
Sofa 6,000.
Car 5,000. Computer 5,000.
Car 1,42,000.
1,42,000. Television 6,000.
Television 23,000.
23,000. Sofa
6,000.
6,000. How many of you have got the same answer? SLM method, television 5,000 per annum for all the years. 17, 18, 5,000, 18, 19, 5,000, 19, 20, 5,000, 20, 21, 5,000, 21, 22, 5,000. That means 5 years, 25,000. The balance comes 25,000. And you are giving it for 2,000. 23,000 is the value of perquisite. Okay, because sold it on 22. That means 3 years. Alright?
Yes.
24,000 you need to deduct. 80,000 minus 24,000 becomes 56,000. And you have sold it for 56,000 is the value of perquisite.
Okay, so got it.
Guys,
Yes, sir.
what about others?
Yes, sir.
Bhuvaneshri,
Yes, sir.
you guys got.
Yes.
Okay, you might get question on these kind of problems because this being the descriptive paper for 80 marks, if not the proper salary question, you might get question on this. Okay? I believe that you guys have understood.
Yes, sir.
Okay? In class, we will accommodation because it's little lengthy.